Did you know that even after age 71, you may still be able to make an RRSP contribution? Most people believe that once you turn 71, RRSP planning is completely over. And for your own RRSP, that's true. But there may be one more option, for your spouse or common law partner. This is not for everyone, and it doesn't always lower your taxes. For some couples, though, it can be a genuinely useful planning tool. So today, we'll look at how a spousal RRSP works after 71, who can actually use it, and the rules you need to understand before you try. Let's make retirement a little smarter. Let's start with the basics. Your own RRSP has an end date. You can contribute to your personal RRSP only until December of the year you turn 71. By the end of that year, you have to decide what to do with it. Most people transfer it into a RRIF, but you could also withdraw the funds or buy an annuity. This is the part many people miss. The door to your own RRSP may close after 71, but another door may still be open, for your spouse or common law partner. That option is called a spousal RRSP. The account belongs to your spouse, but you may be the one putting money into it. This is not a loophole or a shortcut. It's a real rule, but the ability to contribute depends mainly on two conditions. Let's go through them carefully. The first is your spouse's age. Your spouse or common law partner must be 71 or younger on December 31st of the year you make the contribution. So picture this. You're 73, but your spouse is 68. In that case, you may still be able to contribute to their spousal RRSP. Once your spouse also reaches the end of the year they turn 71, this door closes for them too. The second condition is your own contribution room. To put money into a spousal RRSP, you need your own available RRSP deduction limit. You are not using your spouse's RRSP room. You're using yours. So if you have no deduction limit left, this strategy will not work, no matter how young your spouse is. The tax side is where the real benefit shows up. When you contribute to a spousal RRSP, you get the tax deduction, because the money comes from your own deduction limit. But the account itself belongs to your spouse. They are what's called the annuitant, meaning they are the person the account is for. And later, if the timing rules are respected, withdrawals are usually taxed in your spouse's hands, often at a lower rate. That is the planning idea behind a spousal RRSP. It can help balance income between two spouses in retirement. Before you do anything, there is one rule you absolutely must understand. It's called the attribution rule, and getting it wrong can undo the whole benefit. It works like this. If your spouse withdraws money from a spousal RRSP, and you made contributions in that year or in the 2 years before, some or all of the withdrawal may be taxed as your income, not theirs. In plain terms, if you contribute and then your spouse pulls the money out too soon, the tax benefit can be reversed. Timing is everything. This strategy usually works best when the money stays put until the attribution window has passed. Here's one more thing to know. A few exceptions to the attribution rule do exist, such as withdrawals after a relationship breakdown, or if the contributor has passed away. And the rules can work differently for certain RRIF minimum payments. These situations get complicated quickly, so it's worth speaking with a tax professional about your own case. So who does this actually help? Generally, it suits couples where one spouse is older and the other is younger, and where one spouse expects a higher retirement income than the other. By building future retirement income in the lower income spouse's hands, the couple may reduce their combined tax bill over time. But this depends entirely on your situation. It does not automatically lower your taxes, and it is not the right move for every couple. Here's the bottom line. Your own RRSP ends after the year you turn 71. But if your spouse or common law partner is 71 or younger, and you still have your own RRSP deduction limit, you may be able to contribute to a spousal RRSP. You get the deduction, your spouse owns the account, and the money is usually taxed in their hands later. Just respect the attribution rule, because timing matters. It can help some couples, but not all. So it's worth talking to a financial or tax professional before you act. For questions about your RRSP, you can call the CRA at 1-800-959-8281. If this video was helpful, please give it a thumbs up. It really helps more seniors find this information. Subscribe to Wise Senior Canada so you never miss an update, and if you have questions or comments, drop them below. See you in the next video.